And let's get to Uber earnings. Deirdre Bosa has those. Deirdre.
Sarah, it is a beat on the top line, revenue coming in ahead of expectations at $3.9 billion and EPS coming in at 58 cents a share. That's positive 58 cents versus an expected loss of 51 cents. But here's why. The reason it realized a profit in Q2 was thanks to paper gains from its equity investments in Didi and Aurora. Didi, of course, has had a really rough public debut, but Uber got its stake early, so recorded a gain there. And also remember that it sold its autonomous vehicle unit to Aurora for a 25% stake. Gross bookings for rides and delivery combined doubled from the year-ago period to nearly $22 billion. Uber not hitting that adjusted EBITDA metric of profitability that Lyft hit in the past quarter. The figure was a loss of more than $500 million, although CFO Nelson Chai says that it's making progress and expects that to improve to less than $100 million in Q3. This is key here. Forecasting gross bookings between $22 and $24 billion in the current quarter, and that may be why you are seeing shares slip in extended trade. At the low end, that would be flat from the current quarter, which was gross bookings of $22 billion. Key for investors, as I mentioned before, is how Uber is addressing that driver shortage. The company says it added 420,000 drivers in the February to July period. It is unclear what percentage of the total driver supply that is. Remember, Lyft increased by 50% quarter over quarter. More importantly, though, guys, was that enough, those 420,000 drivers? So certainly we will expect analysts to ask for more details on the call, which kicks off in a little bit.